Hello. Good evening, Facebook. Good evening. Good evening, Facebook. Good evening. Good evening. I'm going to ask everybody as you come in, like and share this post. Like and share this post. I'm sharing right now. And my allergies are acting up, y'all. It's always something. And I'm freezing. Sitting here freezing. My face all oily. What's really going on? I think I'm done. Thank you. As you come in, while you're waiting on me to share, tell me about your day. Tell me something good. Let me know how your day went today. Don't be afraid to share. Let me know. Let me know. Hello, Michael Taylor and Nicole Harris. How y'all doing today? I'm gonna be rubbing my eye a lot more today than normal because I don't know what's happening, but I got some allergies going on. It's always something with me, right? I'm cold, got my hat on, got my jacket on, you guys. I be going through a thing over here. I'm gonna give people about another 30 seconds. And then we're gonna go ahead and, hey Maria, and then we're gonna go ahead and move right along. Today we are gonna talk about 3 reasons why you should probably change your life insurance owner. 3 reasons why you should probably want to change the owner on that life insurance policy. All right, so here we're gonna go ahead and get started because I don't want to hold people. I'm a little tired today, of course, because I was up late last night. You know, I work in the middle of the night when everybody else is asleep. You know, I be getting it in. But we're going to talk about 3 reasons why you should change the owner of your life insurance policy. But first, for those of you who are just joining me for the first time, you may not know exactly what it is that I do and who I am. My name is Dorinda Monique Klink. I am an income protection strategist. I help individuals to identify areas of financial risk exposure. I help individuals to put strategies in place to protect their income, their assets, their businesses, and their families. Subsequently, identify some additional disposable income that was hidden. We use that to create some emergency funds, and most importantly, to create some generational wealth, leave behind a legacy, and start a retirement plan. Because of course, when you work hard, you deserve to relax when that time comes. Right, so that's who I am. And today we are going to, oh, and I also teach a financial literacy program. Forgot that part. So today we're going to talk about 3 reasons why you should change your the owner of your life insurance policy, right? A lot of times when we take out life insurance, you know, we take care of the business, we sign the paperwork, we throw the documents in a safe, in a vault, in a closet, under the bed, and then it, you know, we never think about it ever again in life, right? And so a few days ago, we started having this conversation because I noticed there's a lot of people who really don't know what insurance is, what the purpose of it is, and so on and so forth. So I decided, you know, let me go on live, and this may take a few weeks, but every day I want to come on as long as God willing and share some information with individuals regarding life insurance, how that works. Answer some of the questions that you may have always wanted to ask and didn't know how to ask, because of course, sometimes we don't ask questions because we just don't know what we don't know. And so I want to kind of help people along, share some information with them so that they can now be a little more informed, make wiser decisions, and most of all, start the conversation with your families. Take out that life insurance, because it is very, very important that we make sure that we leave this earth with our families the same way they were before we passed away. We don't want to put our families in debt trying to provide for a burial or a funeral service, memorial, or whatever for us. We want to make sure that we do our due diligence and take care of that beforehand. Okay, so with that being said, let's talk about 3 reasons why you might want to change the owner of your life insurance policy. Now, there's a few players involved when you're doing life insurance. Okay, the first player and most important player is the insured, the person who is being insured. That person in most instances is also the owner as well as the payer of the policy. Right? So usually you'll have a 2-party insurance policy where the insured is the owner, the insured, and the payer. But then they'll have a beneficiary, and that's what makes it a 2-part. You have the owner, the insured, and the payer is all in one, and then you have a beneficiary, right? But then in some cases, you have a situation where you may have a parent who is the owner of a child's policy, and then they make themselves the beneficiary, right? Or you may have someone who, you may have a child who is the owner of their parents' policy, and then there's a third person as a beneficiary. But there's some other instances why you may want to make certain that the person who is insured is not the owner, okay? Because you want to do some things to protect your future and your assets and things like that. And that's what we're going to talk about today, because there are some instances where you want to make sure that you change the owner. You want to make sure that the insured is not the owner, okay? So the first reason is that as we age, our minds are, we're just not as sharp as we used to be as we age. I know, I'm real close to 50 at this point, and I'm definitely not as sharp as I was when I was 20, and I know today I'm a whole lot sharper than I will be when I'm 70. It just happens. That's life, and we have to accept it. We have to, grab hold of it and just accept what it is. But, as we age, our minds and our bodies are not as sharp as it once was. So in the event that, as we age, we may deal with some some cognitive challenges, okay? Some challenges where our minds just are not where it used to be. We may deal with some Alzheimer's, and we may have dementia or something. Or we just have a habit of forgetting things. Not necessarily Alzheimer's. We just have some things that we're forgetting. We're getting older, and there's something, some more pressing things that we concern with. You know what I'm saying? So as we get older, we want to make certain that we put people in place that's going to make certain that our bills are taken care of, especially the very, very important bills, things such as our life insurance. Because a life insurance company, when it comes to life insurance, they're not too much concerned, and they're not very forgiving when you say, well, you know what, my mom, she's up in age, she forgot 2 months, and can we just pay? They'll say, well, okay, yeah, you can pay back the amount that's lapsed, right? But a lot of times people don't, because depending upon when that person purchased that insurance, it may not be financially feasible for them to pay that. So now you got a situation where your life insurance has lapsed. So you always want to put somebody in place, especially as you age, that will be more responsible to pay that policy, to that premium, so that you still have that policy in place. Other times is that there's physical impairment, right? If you're not right in your body, you never right in your mind. you know, because if you're not right in your body, you're going to let pain and things like that, it's going to take precedence. And so things that should be in the front of your head, you know, in the front of your mind is just not going to be there. You know, it's just realistic. And we have to be mindful of that, you know. And then there's illness. You know, sometimes as we get age, you know, as we age, we may find ourselves in the hospital. Now, let me tell you this, you know, I deal with seniors a lot. Okay, I'm a Medicare specialist, and I'm a certified long-term care specialist as well. So I deal with seniors quite often. All right, and one thing I find is that our seniors are not very trusting of the new way of banking, right? They don't believe in automatic draft. They don't believe in online banking and things of that nature. So they're still stuck in the writing the paper check, right? So when you're not doing automatic drafts and you have a life insurance policy, in the event that you're hospitalized or you have a cognitive impairment, what happens is that now someone has to remember to pay the bills because it's not coming out automatically, right? So somebody responsible has to be put in place to make certain that those bills are paid. So the best thing to do is to make sure that you change the owner to someone who is responsible and someone who you can trust. Because if you were listening to this yesterday, you remember I mentioned that the owner has the right to change the details of that policy. So you want to make sure that when you change the ownership, you're changing it to somebody that you can trust without a shadow of a doubt, because you want to make sure that at the end of the day, you still have life insurance for your family to claim in order to put you away nicely. You don't want to change the owner and that person decides that they want to be trifling and they start borrowing against your cash value, or even changing who you've put in place as beneficiary, because now they feel that they've got this, you know, amazing gift in their hand, and it's not a gift. You know, you're asking them to do their due diligence on your behalf so that your policy doesn't lapse. Okay, so you want to make sure you put the right people in place that's going to do right by you, right? And so you want to always make sure that someone is there to handle that for you. Now, it's two ways to do this. Now, you can always, you know, keep yourself as the owner and ask maybe a child, you know, a responsible child to become the payor, and then have them do automatic drafts so that payment is coming out, you know, every month automatically, and you don't run the risk of that policy going into a lapsed state. Or you can, as long as you still have your cognitive abilities, you can request a change of ownership form from your life insurance company. And then that way you have to put in writing that you're requesting a change of ownership, and then you sign as the current owner, and the new person has to sign as the new owner of that policy. And then that paperwork is submitted to the life insurance company. Or actually there's a third way, whereas if that person has a, you know, maybe your child or something has power of attorney, something that you've done ahead of time, and they go ahead and feel that changing the ownership or changing the payer is in your best interest, and they have to, at that point, submit a copy of that power of attorney to the life insurance company. They can't just go change some things and think they're gonna get away with it. They have to actually show proof that there's a power of attorney in place. Now, you would have had to do that power of attorney while that insured person still has their cognitive abilities, because you cannot get a power of attorney on someone who has, you know, who doesn't know what's going on mentally. You know, not only can it not be done legally, it's really foul, and you probably go to jail for that if ever caught. And if not go to jail, then you have to sleep with yourself. And that's a hard pill to swallow when you're doing something that trifling to a loved one, especially if it's a parent. But it happens, and it happens every day. But I want you to be mindful of that. And I hope I can just, you know, if anyone's out there with those thoughts in mind, I hope I can, you know, kind of nip that in the bud before you take that direction. So make sure that if you have to do a power of attorney, that power of attorney is done ahead of time, and then it's taken to the life insurance company along with the ownership change form, and those changes are made. So definitely, as you age, you want to make sure that you have someone in place that you can trust who's going to do right by you to make certain that they become the owner, keep the thing the way it has been, the way you prefer it to be, and that make sure that they're going to continue to pay those payments. And they can do that either by changing the owner of the policy or by changing who the payer is. My suggestion would be to change the payer. To be perfectly honest with you, it's the safest way, but you also still have to make certain that the person that you're asking to become payer is actually going to pay the bill. And usually that's the most responsible adult child who will do that, because they want to make sure that mom or dad is taken care of, and they also don't have $10,000 or $12,000 packed away in a sock in order to bury you. So they're going to make certain. Kids who know better, they make certain that the bill is paid, because they know if the bill is not paid, they have to come out of their pockets and be financially responsible to handle that bill. Okay, so that's number one. Number two, if ever there becomes a need for extended care. Extended care means home health aid, nursing home, anything of that nature. You want to make sure that that life insurance is not in your name, because life insurance is an asset. It is an asset. And I'll tell you, if you ever come to a point in your life where you need assistance, government assistance such as Medicaid, they will look at how much life insurance you have. And by law, you can only have, I want to say it's $1,500 death benefit, not $1,500 cash value, but $1,500 face value, just enough to be, to be cremated. So you really want to make sure that you take a look at that. So if you have limited resources at 40, 50, 60 years old, you may want to start kind of moving things around, because what'll happen is if you wait too late and you have to find, you find yourself in a position where you have to start moving assets or spending down, as they call it, then what'll happen is that Medicaid will look back 5 years and they'll say, oh, well, 5 years ago or 4 years ago or 3 years ago, you were the owner of this policy. So now you're hiding assets, and they'll penalize you for that. And they'll delay the period of time in which you can actually receive governmental assistance, putting you in a worse off situation, because now you have no resources that you really need. So you'll have to have somebody in place that can at least provide those services to you, that assistance to you, until Medicaid says, okay, now we'll go ahead and take care of this for you. So you want to make sure that you have someone who can give you some assistance at home. And that's if you have not done your due diligence and taken out long-term care insurance, which long-term care insurance is not covered by Medicare. Let me repeat that for anyone on the line who is either already a senior, or who has Medicare, or who is caring for someone who is on Medicare. Medicare does not cover long-term care, neither does VA benefits. So I need you to understand that. The only time that VA will cover long-term care expenses for a veteran is in the event, first of all, it has to be means tested. They have to be limited financial resources, and then they have to be the worst of the worst scenario before they would provide that long-term care assistance to that veteran. Other than that, long-term care is not covered through the government. So that's something that you would have to take care of on your own, or utilize the services of Medicaid in order to provide that. Medicaid does cover long-term care, including nursing home care. But before they offer that service to you, if you have assets, they're going to require you to spend those down. So you want to make certain that if you have assets available, if you have financial resources available, be it a home, a car, money in the bank, things of that nature, they will look at that and determine whether or not you've qualified financially to receive Medicaid in order to have that nursing home care or that in-home care. Have you spend down every single dime that you have before they decide to allow you to receive that assistance. So as we age, we really need to sit down with a financial planner or someone who is well versed in those type of situations, maybe even an elder care attorney, so that they can advise you properly on what to do with your assets. On yesterday, I mentioned that, you know, the IRS does allow you to gift, I want to say it's $15,000 per person in assets without a gift tax. But you want to make sure you're doing it in such a way that if you're, you know, in need of this additional assistance, that you're not within that 5-year period, because now you become penalized and you have to wait some period of time before you can actually qualify for that. So in that case, sticking on topic here, you want to make certain that if you are already limited resources, then you may want to take a look at that life insurance and move it out of your name. You may want to change the owner of that life insurance so that you don't get stuck in a situation where you may need some government assistance or some long-term health care needs in the future. Okay? And again, life insurance is an asset. And let me touch on that real briefly. Life insurance can be used as collateral, okay? We're going to talk about that some way down the line as far as the many uses of life insurance. But life insurance is an asset, not just the cash value in the life insurance, but also the face value, the death benefit itself. So let's say you have a $50,000 death benefit life insurance policy. You have $50,000 available that you can use as collateral. Why is it collateral? Because as surely as you are born, you shall die. So you can actually take that, you know, some banks will take your life insurance as collateral and say, okay, sign me over as the beneficiary, because you will die. So at some point, they are going to claim what is owed to them. It is an asset. Not only that, your cash value is not actually your money. And we don't have that much time in the world to really explain how it goes. But cash value really says, okay, this is how much you've accumulated, and this is how much the insurance company is willing to loan you or allow you to borrow against, based upon how much you've already paid into the policy. And so as long as you have cash value available to you to withdraw, that serves as an asset. And once you withdraw it, if you withdraw more than what you've put in, now that becomes income, and that's a taxable event. So I hope you guys get that. If not, we will talk about that a little later as we move forward in this life insurance explanation. I'm not sure exactly where at down the road we're going to talk about that, but we will talk about the many uses of insurance, which includes insurance being an asset, and how you can utilize that life insurance to get some little things done for you, especially without having to have a great practice for. Okay, so we'll talk about that real soon. But understand, life insurance is an asset, and so when it comes down to elder care and Medicaid and things of that nature, it is countable. It is countable. Thank you for those of you who are just joining in. We're just talking about insurance here. We're talking about 3 reasons why you should probably consider changing the owner of your life insurance policy. We talked about as we age, we're no longer as sharp as we once were. And so we have some cognitive impairment. We'll have some physical ailments, as well as the chances of having to need some hospitalization. And so in those cases, because our seniors are not, well-versed, or I'm not even going to say not well-versed, I'll just say not interested in utilizing automated banking systems. You know, they don't want you to be tapping into their bank account and pulling out money, electronically and things like that. They're just not on that. A lot of them like, no, you're not going to do that. You know, you're not going to put your hand in my pocketbook. That ain't happening here, right? And so because of that, as we age and have cognitive impairments or physical ailments or become hospitalized and things like that, there's a chance of premiums not being paid. And when premiums are not paid, then those policies lapse. And then once they're lapsed, you have no policy, no insurance at all. And then in some cases, you know, people have paid for insurance for years and years and years. And, you know, while I'm recapping on that, let me share this with you. You know, a lot of times people will say, well, you know, I put in X amount of dollars, you know, let's say I put in $20,000, well, where my money at? You know, well, you've paid for coverage for that period of time. There is no money to be had. You know, if you decide to lapse a policy or if it lapses because of circumstances, there is no money to be had. As you pay a premium, the insurance company covers you in protection. The next month you pay the premium, then the insurance covers you in protection, and it goes on and on. So you don't lose anything. You don't lose your premium. However, you do lose the opportunity cost. And what I mean by that is this. So let's say you got some insurance when you were very, very young, 20, 25 years old. That insurance premium costs you $20 per month. Now, I'm just throwing numbers out there. I'm not going to calculate. But let's say, you know, you're paying it for 40 years, right? And then all of a sudden you decide to lapse it. That policy, you know, a matter of fact, let's just do the math. Let's be more realistic. So I just did a quote for a 27-year-old male. Let me see, somewhere around here. All right, let's see. So let's say we got $25, right? $25 a month, that's $300 a year times, let's see, but I say the person is 20 years old. So let's say 40 years, right? They're now 60. So they're paid in $12,000, but let's say they have a $50,000 policy, right? So you're concerned about losing $12,000 at age 60 because you decided to lapse your policy. Your main concern should be not that you've lost $12,000, because that's not what you lost. That's what you paid for, and that's what you got in return. Your concern should be the fact that you got a $50,000 policy and you now can't, or your family can now, you know, at this point, no longer cash in on it because you lapsed the policy. You were paying $12,000, but the opportunity cost is $38,000. That's what you should be concerned with. You're thinking about the wrong things. You're concerned about what you put in. You should be concerned about what your family gets out, right? So you will never, unless you decide to, you know, purchase life insurance very, very late in life, and then you get very small amounts. Like, you know, let's say you decide at age 70 you want to get $5,000 worth of insurance, and your insurance is $150 a month or whatever. Now at that point you may be putting more in than you get out, but for the most part, on average, you'll never pay as much as what you get out in return. So, you know, with our example, you know, a 20-something-year-old pays $25 a month for 40 years, puts in $12,000, lapses the policy because of whatever, and now, you know, your family loses out $38,000, and that's the real problem. That's the biggest concern right there that you should be focusing on, not the $12,000 that was used to actually cover you, okay? Or I should say cover your family, because that's what you're doing. You're covering your family. So anyhow, so that was number one. You know, we're not as sharp as we once were. So we want to make sure we put somebody in place who's going to be responsible enough to continue to pay that bill on our behalf. And in order to do that, you either want to change the owner, or you want to change the payer, so that you don't have to worry about whether or not it's paid. Or, you know, you just may not be in a situation where you have the mental capacity to even know that it even exists anymore. And it happens, right? Alzheimer's and dementia is real. So we want to make sure we have someone in place that's responsible enough to take care of that. So if you have parents or grandparents who are, you know, up in age, you may want to start having those conversations. Now, I know they're going to probably lash out, and they're going to probably come back with some resistance and say, well, you know, what, you trying to kill me off? You know, because that's what they do. I got a mama that's up there. That's what they do, you know. But you want to sit them down and have a real conversation with them. You want to approach that conversation with, what if, you know, what if, so that you can be prepared. Everybody needs to be prepared. So you want to approach it with what if, right? The second reason is that in the event that that person will need some extended care or need some Medicaid assistance or something like that, they will count that life insurance as a basket. They'll look at the face value as well as the cash value, and you can't have more than a $1,500 death benefit, just enough in order to provide you with a cremation. Anything higher than $1,500, then Medicaid can actually reduce your benefits or force your family to pay those benefits back if they get winded without you have a life insurance policy. So you may want to go ahead and change the owner on that life insurance in order to keep your Medicaid benefits intact, if that's you. If I'm talking to you, you may want to, you know, change your owner on that so that you don't get hit in the pocket with Medicaid, especially if you're in a financial situation or in a medical situation where you need that assistance. Okay? The final thing is that if that person, if the insured has a reckless lifestyle, if that insured has a reckless lifestyle, you want to make sure, when I say reckless lifestyle, let me be clear here. We're talking about people who have issues with addiction. You know, we want to talk about people who have poor payment history. We want to talk about people who are irresponsible. If they have any of those, you may want to consider talking with them about changing the owner on their policy. If they have reckless behavior where they're just out there in the world, you can't bring them back in. You want to sit down and talk to them and try to get them to get that policy switched over as quickly as possible, because you don't want to be in a situation that policy is not paid. Now, in my business, most of the times when I have families where they have family members who are out there in the world, a lot of times the parent is the one that goes and get the life insurance, not the child. The parent goes and get the life insurance from the start anyway, and then they try to get the child in to sign off, because if you're an adult, you have to have your signature on there. People can't, even parents, they just can't go and get life insurance on you without your permission. You have to have your signature. So in that case, it will be okay because the parent is the owner. But again, if the parent is up in age, the parent may want to get one of the siblings to be the owner of that policy so that they don't run into an issue with Medicaid and things like that, saying that, okay, this is an asset because you're the owner of that policy. So you want to be real careful about who you're putting in place on those lines, because it can come back to bite you if you need governmental assistance. If that person, if that insured person has a poor payment history, they don't pay nothing. They don't pay you back. They don't pay a light bill. And we know some people out there like that. You might want to talk to them and say, look, you know what? Let me be the payer of that policy because I want to make sure it is paid. And then you give me the $20 or the $30 every month, and I'll pay it. And then even if they don't pay you that money, you can still make sure that policy is paid. Because again, at the end of the day, if that insured is your offspring, your sibling or something like that, and they pass away, that bill goes to the family, and the family is the one responsible for paying off that funeral service, and you want to make sure that you're protected. So do whatever you have to do to become at least the payer of that policy, so the policy is continuously paid, even if you choose not to be the owner, at least be the payer. Now, here's a reason why you would want to be the payer and the owner on that policy, though, because if you're the owner, if that person is the owner of that policy and they already have a poor payment history, what do you think is going to happen when they need a bill paid? They're going to dip into that cash value. They're going to use it as an ATM, and then eventually they're going to dwindle down the cash value to a point where it lapses the policy. So you don't want that happening. So you may want to just become the owner and the payer. And then that way you can make sure that that person is always covered if they're irresponsible with, with payments and things like that. So really, that's it. You know, so really, you know, there's a couple, like I said, there's a few reasons why you want to make sure that you have someone else in place. And life insurance is not always cut and dry like we think. You know, like I said, a lot of times we fill out that policy and we sign on the dotted line. We don't open it again. We put it somewhere in the house. We can't find it. We don't know who our life insurance company is. We don't know who the agent is. We haven't seen the agent. Things change. There's a death. You got a person on the beneficiary as a beneficiary, and the beneficiary is no longer living, or you no longer communicate with them. There's 1,001 things that happens, you know, and so you have to just really make sure that you're doing your due diligence. And even if you don't really know the questions to ask them anyway. You might be surprised at how much you really know, but you know, just always weren't sure. So be sure when it comes to life insurance. You have to be sure, because you're spending money to protect your family. So you want to make sure you're doing the right things and protecting people to the fullest. So especially when it comes to our elders, when it comes to our parents, and when it comes to our individuals who are disabled or have cognitive, disability or cognitive impairment, or individuals who are out there in the world and we haven't brought them back home yet. We have to make sure that we still have them covered, because at the end of the day, no matter what their situation is, as surely as you're born, you will die. And at some point, that bill comes back to bite you. And so you have to protect yourself while you're protecting your loved one. Okay, so if you have any questions, please make sure you put those questions in the comment section. I will double back check those comments. I will answer those. If it's too personal of a question that you feel, if you feel that your question is too personal, you like to ask me behind the scenes, feel free to hit my inbox, or you can check my business page. My number is there. You can always give me a phone call, send me an email. I have no problems with that. So with that being said, you know, I'm going to go ahead and get off of here. It's kind of late. I'm hungry and I'm sleepy. So, as always, I'm your girl, Doreen Klink, Income Protection Specialist. You guys have a great night. Be safe. Love you.